Wow, this is a total game changer. Robinhood to allow users to buy into IPOs ahead of its own market debut. Few days ago, Robinhood Markets unveiled a new platform that will give retail investors the opportunity to buy shares in initial public offering, something that has long been the exclusive domain of Wall Street funds and rich whales. There are a lot of questions to discuss. What opportunities does it have? How does it work? Why is it extremely dangerous to invest in any companies before IPO and right after public offering? In this video, guys, I will show with you everything you have to know about this new IPO feature from Robinhood and everything you have to know before investing in any IPO company, how I lost money in 2020 when I invested in some pre-IPO companies. Watch this video to know. Hi guys, my name is Dmitry Bonder. I live in Austin, Texas with my family. On this channel, I share how we are building our family wealth through the long-term investing in stocks, real estate, and cryptocurrencies. Every week, I analyze many sources of information from reliable sources, not YOLO investing groups, and share my conclusions on the channel to help you and me make the right investment decisions. So if you share my values, consider being a part of my community and subscribe. Okay, why this Robinhood new feature is a game changer? First of all, because since the first IPO of Dutch East India Company in the 16th century, that was the only one way for companies to get access to a public market. For many centuries, investment banks were the gatekeepers for many companies to launch IPO. And initial public offering is a very long and expensive process. Because we retail investors cannot buy any stocks before employees and investment banks, before they take their part of pie, and we cannot buy below the IPO price of the share. So we can buy only after IPO officially launched. On November 26, 2019, the New York Stock Exchange laid the groundwork with an SEC filing to allow listed companies to raise capital and go public through a direct listing. That was the beginning of direct listing era. The major difference between a direct listing and an IPO is that one sells existing stocks, while the other issues new stock shares. In a direct listing, employees and investors sell their existing stocks to the public. In an IPO, a company sells part of the company by issuing and new stocks. So most famous companies who use direct listing were, for example, Spotify and Slack. And now it seems that Robinhood team have a very serious intention to change the rules again and give millions of retail investors to buy IPO companies even before the actual start of IPO. That was unimaginable 5 years ago. Okay, let's begin with the positive side of this approach and their platform. As most IPO shares typically go to the institutions and wealthy investors, small investors are not allowed to buy. With IPO Access, new Robinhood feature, everyday investors at Robinhood will have the chance to get in at the IPO price. Robinhood will work with Wall Street investment banks to get allocations for retail investors. Robinhood said that the new platform will be available to customers without any account limit restrictions. It plans to list a number of upcoming IPOs for the customers. Great news, right? And another great news that if you click the like button right now, YouTube algorithm will push this video and many retail investors watch this video and we become one big strong community and could influence the market forever. Hello GameStop, AMC, short sellers and hedge funds. Okay. While Robinhood did identify specific offerings which would be available, we know that Fix Inc. will be the first company to offer shares to retail investors in this way. The maker of medical scrubs, face masks and shields is reserving 1% of its IPO offering of 23 million shares for Robinhood users. A few days ago, I got their email and invitation to invest on the pre-IPO stage. Several big names such as a grocery delivery app Instacart, Brazilian digital bank Nubank, and electric vehicle maker Rivian are expected to go public later this year as using this platform as well. So large institutional investors and funds have traditionally been the first in line for allocations on IPOs, and the investment banks that control share allocations find it easier to arrange it when only a handful of recipients are involved, and because they need to keep these deep-pocketed clients happy to win other businesses. So this move is Robinhood's latest to antagonize Wall Street. IPO stocks popped on their first day, averaged 36% in 2020, according to Dealogic, demonstrating individual investors' thirst for some of these popular names that are not priced into IPO pricing. These are gains the little guy is missing out on. The traditional IPO process has been criticized in recent years as being broken, with investment banks allowing shares to be clients who reap the instant first-day gains. So going public by way of direct listing has combated some of this criticism. Okay, now how does Robinhood IPO Access feature works? So using IPO Access, Robinhood clients will be able to request to buy shares at their initial listing price range. When the final price is set, clients will be able to go through with their purchase, change or cancel. Medical scrubs company Fix, which filed its paperwork to go public, will be the first company to offer its share on the Robinhood app. So they wrote on their website, "We are currently anticipating that up to 1% of the shares of Class A common stocks offered hereby will be offered to retail investors through Robinhood LLC as a selling group member with its online brokerage platform." It sounds great, guys, but there are some pitfalls for every investor, you and me, and it might be quite dangerous. Well, the first reason, this is a brand new platform and you cannot be sure whether it works properly or not. Even Robinhood warns about it. This is the first initial public offering to be included on the Robinhood platform, and there may be risks associated with the use of Robinhood platform that we cannot foresee, including risk related to the technology and operation of the platform, and the publicity and the use of social media by users of the platform that we cannot control, the company added in their press release. The second reason why it may be risky to invest right away that you don't know exactly if the company is worth it right now. The only one source of information for you is the company's prospectus. A prospectus is a kind of formal document that is required by and filed with the Security and Exchange Commission (SEC) that provides details about investment offering for sale to the public. I made this type of mistakes at least twice. First time it happened in 2019 when I bought Slack IPO stocks. Second time, what a dumb investor. I'm talking about myself. In 2020, I bought Jumia shares, aka African Amazon, and shares dropped immediately from $45 to $17 right immediately after IPO. So if you don't want to repeat my mistakes, I highly encourage you to make a more informed decision on whether or not to invest. At least read IPO prospectus very carefully. For sure you have to read it, but please understand that the real situation can be quite different. And prospectus, it's a paper that is prepared by company. It's a sales pitch, so they are more likely to show their good sides. Only after 2 or even 3 quarters after IPO, you will see the real price of the company and its shares. So you will see the financial results, and as you know, the numbers don't lie. So just remember, a successful IPO means your stock price will go down. It's a rule. Why? Because the company is preparing for strongly and putting a lot of effort to maximize its value before the IPO. And it's normal that the price will go down later to the real one from the maximized one. It's up to you whether to invest via Robinhood IPO Access feature or not. Hope no matter what the decision you make, it will gain you a profit. Thank you for watching this video, guys. I hope it was valuable for you, and now you better understand whether you have to invest with a new Robinhood IPO Access feature or not. Consider to subscribe, and peace out.